Hey guys, what's going on? Kunal here, Bulls on Wall Street. Guys, the stock market is getting dusted this morning. We're looking at probably implied open of maybe minus 700 points. You can just see there's fear in the air about this coronavirus. But what I wanted to talk to you guys about today, I've been getting a lot of questions on this. What can you do to protect yourself if you can't short? So obviously the play in the market has been short the market. But what about like in your IRAs, your 401ks? Like you can't short in those, obviously. So what can you do to protect yourself? What are some things or instruments that you can use that can help you profit from the volatility without, being able to short? So one of the things that we utilize in our chat room, we've got an awesome Discord room, and you guys are more than welcome to come in here and hang out with us. It's awesome. We've been crushing. There's a lot of good traders in there. But I use a couple things when the market gets like this. I throw individual stocks out the window, right? Individual stocks out the window unless they're just large cap names. But if you have an IRA or something, you need to hedge out some positions, or you need to be able to short with the market. We use inverse ETFs. So you can see like there are ETFs like this SQQ. So SQQ essentially goes up when the market goes down. So this is a 3X ETF for the NASDAQ. So when the NASDAQ goes down like it is today, then you'll see this SQQ. You can see like last night it closed, into the 21 area. It's already up at 23 bucks when the market opens. So it's gapping up today. So these are things you can use. So like, for example, say you have an IRA and you've got some stocks that you like, but they're just getting pummeled, right? You can go in and say, like what I personally do, I'll go in and buy, say, 1,000 shares of SQQ as the market is getting smoked out like this, and that'll hedge out some of my losses, essentially. Now, on the other side of things, on the day trading side of things, you can actually day trade this stuff too. So you can day trade this stuff back and forth also. So if you can't short, or you don't know how to short, I get a lot of students in my 60-day boot camp. They're just not comfortable with shorting. They don't have the apparatus for it, or they just, they're still learning and getting used to it and simulating. So you can long these inverse ETFs, and that'll help you short the market. So SQQ is, one that I use. We use this TVIX like a lot. This TVIX was 39 bucks. It's a volatility ETF. So when the market gets more volatile and there's fear in the air, this TVIX essentially starts to fly when the market goes down. You can see this thing is going to be opening up today at like 200 bucks. I mean, it's just been like on a rampage. I don't recommend holding these like overnight, but it's because it's these things are likely to kind of implode down because it's a leveraged ETF for volatility. But it's an awesome day trading vehicle too. Like you can see like this thing grinding down at 20 EMA and then poof, right? $20, $30 pop. So these are inverse ETFs that go up when the market goes down. So you can use stuff like this. There's SPXU. This is for the SPY. So, when the SPY goes down, this goes up. And like Paul, in our swing trade service, that's like stuff that like he'll do to hedge out positions. He'll buy, SPXU or, SQQ as a way to short the market without actually having to short. It ends up being pretty cool. That's like one way you can kind of get into this stuff. So those are my favorites. SPXU, TVIX, and then SQQ are inverse ETFs that can help you short the market, and they have them for everything. So like if you wanted to short natural gas, they have this DGAS, and if you wanted to short oil, they have DWT. So when oil goes down, this one goes up. And they have them for everything. If you wanted to short banks, right? Who doesn't want to short some banks? You can go in and use this FAZ. You can see this thing was $23. Now this thing is going to be opening up at like $37. And they're pretty liquid, most of these too. So you can do something like that. Frankly, if you just go on like Google, and just, they have like lists of these ETFs. But I typically just use a handful of them, like SQQ, TQQ, TVIX, because they're all going to kind of move in lockstep when the market gets like this. Guys, I know it's very scary out there. with so much volatility in there. The level I'm watching is this 285 on the SPY. If we double bottom here, we might get close. We flush down in here. I think that could, send this market probably popping back, for a couple days. Now, if we break under, it's all, everything is off the table. But we're opening down like 700, 800 points. Like how much meat on it? How much meat is there to actually short this thing, today? If you're holding some of those inverse ETFs, sell some into the spike today, and then you can always rejigger them. So guys, hopefully that helps. Don't worry if you can't short, because there are instruments out there that can help you. Guys, thank you for all coming into our webinar last week on how to trade news catalyst. I left a video for you in the YouTube channel. Of course, smash that like button and share it if you guys like what we do. Trade safe, guys. It's a scary time. Risk management is everything. Take care.